Right, so welcome to the first IMR of the new financial year. So this is for the week ending Friday, 7th April 2017. And well, on the eve of, or rather the start of the new financial year, wishing everyone who is on the webinar and who watches this later, really great financial year ahead. Hope we all make more money than we've ever made in the past in any year, and that at least for some of us, if not all of us, it's really going to be a year of transformation in how we look at the markets, how we take advantage of the opportunities that it is constantly offering, and in the way and the amounts of money that we make in terms of doing it with less stress, less at low risk, and some substantial returns, whatever substantial uh, could mean to each and every person. I certainly hope that's the case. That's what the case is going to be for me, and I look forward to sharing my journey with you in the next 12 months. So having said that, let's jump into where the markets are. Of course, we probably all know that major events have happened. Nifty has continued to hit a new life high. Right, so Nifty hit a new life high yesterday, and of course today it has cooled off a little bit. The RBI policy has gotten over, and the US launched 59 Tomahawk missiles on the Syrian Air Force base as a sort of retaliation or an attack after the Syrian Air Force apparently because the Syrian government and the Russian government say that it did not happen, and what did not happen is that a certain chemical attack on the Syrian owned people where some 20-25 people died. Well, anyhow, US getting involved in the Russian conflict in a very direct manner now. How this changes the um, scenario in the Middle East and perhaps the rest of the world and sends out a signal, I think we'll know in the next few days and weeks, and that US is now ready to engage with or without anybody's approval. And then the reaction to that, of course, in crude oil, where crude oil jumped in early trade yesterday, today, and whether that's going to start making crude oil go higher. Anyhow, so in the background of all this, we've had the GST bill being passed. We've had being passed both in the Rajya Sabha and the Lok Sabha. So Jaitley's 1st of July rollout seems to be on track. Even Manmohan Singh, the former Prime Minister of India, praised the passage of the bill. So some transformation is definitely going on, a major one. Whether it is life-changing is perhaps too strong a word in my opinion, but definitely something pretty radical, which has been pending for at least a decade, if not more, and how that might stimulate or do something else to the Indian economy is something that we'll have to wait and watch. So interesting transformative times ahead. So coming to the global markets now. Okay, let me just complete the NSE thing. So as far as the NSE is concerned, still very much in an uptrend. That will be the trend line to watch, I think. So anywhere below 9173, 9170 is where this trend line or thereabout it breaks, and a break below 9100 could potentially make it a pretty strong reversal. May go to 9,000 and then turn around, but this has actually stretched. The market itself has gone quite far beyond its how should I say, mean as in averages and all, and some sort of mean reversal, at least statistically and mathematically speaking, would happen. Whether it's happening now or it'll again go up and then happen later, that's a little bit tough to say. But with the 200-day moving average at around 8,500 odd and the market at 9,200 odd, it's quite a distance away. So definitely not suggesting that 8,500 on the Nifty is going to happen in the near future, but some sort of mean reversal maybe to 9,000, 8,900 could possibly happen before the next leg up starts. So it's just part of the correction that is going on. All right. So that's the view on the Nifty. Of course, the big resistance is the life high. We have a a hanging man there, and then a confirmation that happened today at about 9,272. So that will be the key level to watch on the upside. So in my view, a bit of a correction before the up move continues perhaps again. And we are also now getting into results season. The annual results of the companies will start coming out in a very rapid fashion in a couple of days, and things could become pretty stock specific or sector specific going forward, right? And then of course a little couple of months down the line we'll have the whole monsoon thing to deal with once again. Okay, so with that background on the Indian markets, let's look at how things are on the US markets, etc. So looking at the Dow Jones. So this is where it is. We had seen this in the IMR 2 weeks back, and when this big fall happened in this candle daily chart, we had mentioned that uptrend is potentially now over. We have a sort of support line at 20,600 on the Dow Jones, and as you can see, this line has is what we kept 2 weeks back, and that's where it is basically trying to figure out what to do. If I extend this downtrend line, you will see that fits nicely with this high, with this body. So quite possible that the Dow Jones is in a sort of early downtrend. You clearly have two lower bottoms now, lower tops, lower bottoms. So can't be ignored. And looking at where the US markets are at this point, just bringing that up on my second screen. So almost everything in the red, not by much, but about 2.2, 0.3% down on the S&P as we speak, and the Dow Jones is, well, more or less flat. So clearly the Syrian airstrike has really not perturbed the US markets at all much. All the indices in the Nasdaq are clearly in the red but nothing substantial, and in the NYSE indices are also all in the red, as you can see, but more or less flat. Now, one interesting thing to keep in mind, if you look at how things happen today on India's market, is the late sell-off that happened on the NSE. You know, the whole of the day it was about 20-30 points range down, and then after 2 o'clock it just started to move down, and we had a 63 point fall, and even I wouldn't say any recovery, no recovery happened at the end either of this fall. So clearly a bearish session. Now whether something like this could also happen in the US as the US markets close is something we'll have to uh, watch out for. Okay, now go back to looking at where the rest of the world is. If we were to look at Europe, then well, interesting. The FTSE is actually 0.5% up, but quite possibly on account of local Brexit issues, I would think. And the rest of the Europe is mildly down to flat. So again, really no strong direction coming in from um, from Europe or from US. And getting back to our chart, so in the US on the Dow Jones 20,600, it'd be the key level to watch out for, and further down at 20,400. If that breaks, then clearly this downtrend is likely to accelerate, and maybe 20,000 is going to be tested on the Dow Jones in the coming weeks. Then looking at the S&P, should be more or less the same like the Dow Jones. Yes, you have the 2,340 support level, and then we have the downtrend on the S&P 500. So the broader market, the narrow market, all looking the same. This could be a sort of little, what shall I say, um, not textbook head and shoulder top, or you could even look at it as a descending triangle. So we're looking at about 50-point fall on the S&P 500. That's 2%. If it breaks 2340, it should easily take it to 2300 on the S&P 500. So moving on to Europe. So we have Germany, and after hitting a life high, it's not been able to maintain that and has come back down. So what's important is to note this double top 2015 and 2017. If this double top gets broken, then DAX is likely to, in my opinion, go up, and quite possibly go up all the way to 15,000. The trend line to watch on DAX would be this. All right, so be interesting to watch whether it holds that trend line or the 12,000 mark on the DAX, or it manages, or it breaks down, or it manages to go back up. Right. So DAX uptrend continues. FTSE very much in the green today, is more or less at its life high zones. Of course, the pound sterling is a much devalued currency after Brexit, and here we have clearly the FTSE sort of struggling in a 7,300 to 7,400 zone, and that resistance is definitely getting stronger. Until and unless the FTSE can break 7440, we will really not have any clarity on what further could happen. Okay, so this is the story on FTSE. So clearly some resistance at higher levels on the FTSE. DAX at an important 2-3 year double top. Looking at CAC, France, Oh, this is interesting. So France definitely showing strength, not showing weakness like the other counterparts in Europe. And if it can do this, well, maybe it's actually going to go to 50 to 50, and then face some resistance. At which point we can review. But if I had to choose my index for the week ahead, I think I would probably prefer to choose the CAC 40 versus any other European index for now. All right. So European indices all basically showing strength. Some correction, yes, but nothing like what is there in the US markets. For this, looking for completion at Nikkei, and clearly it's broken this ascending triangle and gone down quite a bit. So the downtrend in Nikkei is getting accelerated. So from 19,600 levels 2 weeks back, we are at 18,500 levels on the Nikkei right now, and I suspect it's going to go to at least 18,300. That's where any decent support is, and then we'll have to review. So 18,400 is the least I would look out for on the Nikkei. So overall, the view would be, I would say, at best neutral. Wouldn't be too bullish on the markets going forward, especially with the way the US indices are are positioned. I think the European indices, especially with a lot of elections coming up in each of the European countries, France and Germany especially this year, would be driven by local factors rather than any international factors, unless something really major were to happen in the Middle East or something like that. Since we're looking at it, I just wanted to see if we can see crude oil should have started, but since crude oil is not live data that we have, so crude oil India futures continuous has gone up from 3100 a week back to 3350. And since I don't have live data on crude oil here, I don't know, but it had gone up after the Syrian strike. There's also a parallel announcement about potentially diesel and petrol prices being managed on a daily basis. Currently, they are being changed on a fortnightly basis, and prices could change at the pump every day, midnight or something like that. That is something in the works ahead. So if you look at it, crude oil has gone up 10% in the last 1 week, and we are on the 7th of April. Another week from now, if this trend continues, then your diesel and fuel should probably go up. So maybe good time to fill up the tanks and save a few bucks. All right. Coming to our sector indices to take things forward. We did the Nifty, and like I said, just to repeat, 93, 92, 60, 92, 70 is definitely a resistance. On the weekly chart, we clearly see that this is the double top I was talking about, 2015 there, and then now we have managed to go up above that. There's definitely still some strength in the indicators left, so quite possible we could continue to rise. But on a daily basis, there is some weakness, and this trend line could get broken and could perhaps go down to 9,000 even. Any longs, I think, should be initiated only at around 91.70 if you're a Nifty trader. only after observing whether it holds 92, say 91.70, 91.50. Otherwise, sort of a little bit of a no man's land. Of course, given the Syrian thing and the posturing by the Syrian and the Russian governments, if there is something that happens over the weekend, there could is definitely chance of a gap up or down on Monday morning is distinctly there. Right. Looking at the Nifty next, or old name Nifty Junior, that's definitely showing more strength in my opinion than the Nifty itself. So no doubt that the mid-market, mid-cap companies are outperforming the large cap companies. No red candle today on the Nifty next, and some shooting star of course, but still a relative strength clearly there in the Nifty next stocks. So something at some point we should really review those stocks. Maybe we'll do that today. Let's see. Looking at the broad market, CNX 500, more or less a copy of Nifty, showing the weakness. But again, I think this is showing more strength than the Nifty is. So this is going up. Relative strength is more in the CNX 500. So the mid cap and the smaller cap company is definitely doing better than the large cap companies. Coming to the sector indices, looking at the banks first. So looking at the bank Nifty. So this RBI policy came and went, again more or less a sort of non-event. But the big thing is I think the UP farm loan waiver for farmers, and what does that do to the bank's balance sheets. This bearish divergence, just give it 30 seconds, hold on. So this negative divergence in the bank Nifty is there. However, not of any great concern right now. You have it going in in a strong uptrend, and when that's the case, it's pretty okay that you get negative divergence, which one would be a little careful to give too much attention to. So this is where the bank Nifty is. So clearly still very much on an uptrend, but negative divergence there. May correct to 2100 at least, maybe even 20,800, and then we'll have to review from there. Looking at the PSU banks, so that's where a lot more concern is. I think after the announcement of the farm loan waiver in UP, so the PSU banks were clearly able to break out of this multi-year resistance band that we marked, and it's been there since 2012, this pink band, and it's been able to break that. Now whether it's going to take support and be able to come back up, or whether we're going to see some sort of correction back, I think time will tell, but it'll be interesting to watch. So very clearly I think that's the level to watch out for. At this point technically it would be buy on any dip, but where does this settle down is the moot point, right? On the other hand, there's a lot of talk and rumors going on about the government trying to do something, or is going to do something rather, about the stressed assets of the banks, how they're going to do that, how they're going to take them off the balance sheet or recapitalize or whatever. All said and done, anything that happens there would be a positive financially speaking for these banks, the PSU banks especially. and they could be on their way up. We've already discussed this 2 weeks back in the IMR, and we spent quite a bit talking about public sector banks and the potentially very strong bullish opportunity that exists from an investment perspective. So if you missed that, please have a look at the IMR for PSU banks from 2 weeks back. So banking again, looking a little weak, but nevertheless in an uptrend, and especially the PSU bank, after having broken out this multi-year resistance zone, could actually be potentially a good buy on any correction. Looking at the realty space, so that's really been rocking, and it's been going up quite strongly. As you can see, this is more or less a default of DLF, and we keep mentioning that when we mention realty, so obviously it's probably done quite well. Well, let's quickly look at DLF, and well, there you can see how it is breaking through various resistances, and you can see that DLF gradually has broken out from a 7-year downtrend and is potentially perhaps on a very strong wicket to go up from here. It's definitely formed a base. You can see that on a monthly chart here, okay, so because of the Bollinger Band and the way it gets calculated here, the chart's getting a little wonky. Okay, let me see if I can fix that. Okay, that's not what I wanted. Okay, I was trying to stretch the chart. I'll figure that out later. But on the monthly chart, please note that you probably have a left shoulder here, a right shoulder here, left shoulder head and a right shoulder that is forming and potentially, I would say, breaking out. And if you look at the weekly chart, you can see that there is definitely good strength and strength after strength that's getting built up. So DLF has gone from 110 to 160 and quite possible on its way up. So DLF is, well, we don't usually do individual stocks in part 1 of the IMR, but this was such a strong one, I just wanted to do it. Definitely a strong buy, should be accumulated at every opportunity that you get, right? Also be prepared for these big crashes like you saw from 150 to 140, 14 rupees one day. That's 8% down in one day. Be prepared for that, but it, as you can see, took a month to recover and has gone beyond that now, and in my opinion likely to go back up all the way to 180, 175, and then definitely much higher. Okay, so that is realty index for you, and then looking at the other indices. Auto, so auto was a mixed bag. It was had this big corrections and it's been able to go back up. It's at this downtrend line, as you can see, and we'll just have to wait and watch as to how it behaves around this levels, becoming a triangle, quite obvious, and whether it decides to break out or does it break down from here. Well, I think we'll know in the coming week. Uh, Again, likely to be very stock specific with respect to the annual results, etc. But very recently, I think what we saw is that if you look at the sales results, quite strong and quite impressive across the board for all the auto companies. Capital goods, whoa, look at this. So we have been talking about potentially them going up for some time. I was definitely not expecting to see some strong move like this. This is really impressive. Daily chart in the last 1 week, something has really moved from, made the index move from 16,200 to 17,200. The big heavyweight, if I remember correctly, is LNT in this index. Let's see. Yep, there you go. LNT has shot up from 1500 to almost 1700 in just 3 days, and that's what's driven the capital goods index up. So LNT, I think, on its way to a new life high of 1900, and then definitely on to much higher levels. Right. So looking at even volumes, it's been, you can see there's been a change of management at LNT recently. I think the ex-financial head was made the CEO, and Nayak has become the non-executive chairman or something like that. Part of LNT's transformation. So after consolidating for 3 weeks in March, it has now just shot off, and I think quite sure that it's quite very much on its way to a new life high. So that's definitely another good buying up opportunity. The capital goods index, uh, main heavyweight. Looking at FMCG. So FMCG, all right. So here's something which is clearly of something to note. We have a sort of double top there. It's a top here and a top there. And you also, so while in the weekly it's still looking okay and actually looking like a flag formation, in the daily there is a little bit of a mild weakness on the FMCG side, and this is where it is. All right, so that's your bearish divergence on FMCG, and we'll just have to wait and watch on that and see how that bearish divergence pans out, whether the FMCG is correct to about 8,800 or they go higher. So capital goods looking good, mid cap looking good, if everything else so far looking a little iffy. Healthcare, well, the time of reckoning, well, looks like a breakdown, but it's so close to the apex. It's going to be a little iffy to what should I say? Uh, um, be too uh, optimistic about it. Definitely, healthcare is a space what one should probably stay out of. The pharma index, CNX pharma, purely pharmaceutical, clearly bearish. So things not good on the pharma side, and you can also see that this downtrend from late 2015, well, that just continues. All right, so pharma bearish. One sector which is clearly bearish, and I think the stocks in this one should study closer in case the market overall corrects. This is the one place that you should be looking to short. Whether it's the CNX IT also looking quite weak. You have a nice rounding top, and that rounding top battling with the long-term moving averages. This downtrend line of 2 years now, providing a lot of resistance, something we had mentioned 2 weeks back, saying watch this resistance and see if this can break. Well, it clearly did not break, and if the CNX IT index goes below 10,400 odd, then I think 10,200, 10,100 become very real possibility. So another space to watch carefully, and be prepared to short that if things continue to deteriorate. All right, looking at the metal index. So, well, one thing that it hasn't done that we spoke about as a possibility, it has not broken down this uh, support, and we had a rounding top here which really nothing came of it, so I'm just going to take it off. And what you do have, however, is a left shoulder, a head, a right shoulder, which if this neckline breaks, then the BSE metal index could drop easily to 11,000 or even 10,800. But looks like for now that is at least a few, maybe a couple, 1 or 2 weeks away, just going by the proportionality on this chart. So one more sector which is a bit weak. Power, well, it's raring away. So capital goods, power, and perhaps the banks, private banks especially, looking good, and maybe even the public sector banks, like I said, after breaking out of their 2-year know, resistance band. So power looking good, and looks like power could go to 2400 and then go much higher after that in the year ahead. Okay, and then have we missed anything? Nope, that's it. Okay, so to quickly review, capital goods, power is where the strength is, and realty also, specifically DLF. So already identified L&T and DLF as good potential buying opportunities. No matter how much the market drops, these two one should probably get into and accumulate more of. Clearly, what's on the short side is things like IT and also pharma side, pharma or healthcare. So quite a nicely divided market. You have uh, some sectors which are clearly bullish and some sectors which are clearly bearish. So we'll have to look at how they pan out. So interesting in the sense that if the market is weak next week, Monday, Tuesday, you've got two clear shorts. And on the other hand, if the market is strong, you've got also two clear long opportunities. Okay. Like I said, before we close this part 1 of the IMR, going forward for the next 1 or 2, 3 weeks, it will become highly stock specific based on annual results and GST and impact of stuff like that. So don't just blindly invest in any sector. Get stock specific and then take a call on your trades and investment. Okay, so basically a divided market, which brings us to the end of part 1 of this IMR. We title it business as usual. Well, 59 Tomohawks are definitely not business as usual. GST passing is not business as usual. A big farm loan waiver in UP is not business as usual. So it's actually pretty interesting stuff that's happening there for those of us who are interested to follow political and economic events. It'll be really fascinating to see how things pan out. Okay, so what we'll do so I'm going to close this part 1, and what we'll do in part 2 and take a fresh look is perhaps the mid-cap stuff in the Nifty Junior Index. We haven't seen that for a very, very long time, and I'm quite sure we're going to find some interesting opportunities in that, right? Okay, so closing this, thank you for watching, and please send in your feedback on the contact information that you have above. And for those of us who are online, I'm going to send the part 2 IMR link just in a next few seconds, right? So bye and have a great weekend.